Hello everybody, my name is Christian Chalo. Welcome to this market report. Today we're Wednesday, April 2nd, 2014. Today folks, what I want to make a follow-up on the March 26th market report that we did when we talked about what stocks to short. And today I'm going to show you also a movement that seems to happen in the gold sector. So we might actually have a bullish cycle in the gold sector. Couple of stocks are standing out, and actually there's some stocks to be watched if ever we have a confirmation of a bullish momentum on the gold sector. So before that, let's make a follow-up on the last market chronicle. I told you what to short. It was on March 26th. When we're looking at the situation in the NASDAQ though, this is where we were. This is the hour that you see here. Now, in terms of potential, well, we had a potential until we reach that upward corridor, the upward trend. We did reach it, so definitely right now, some short did pay off, but some of them you should consider to get rid of them if ever you have the NASDAQ that is breaking this resistance. On the S&P 500, we thought that we could have a bearish cycle, but as I said on the last market report, it was some exceptions that we saw that you could short. I told you to not be in a shorting spree because the S&P 500 didn't start a bearish cycle, and right now the S&P 500 is breaking its resistance right now. Now, if you take a look at the stocks that we talked about as a short, TIBCO Software was recommended among our analyst choice on marketgurus.tv that you can have access for free just by clicking at the link below. Well, TIBCO Software so far, we're still holding on to it as long as the stock doesn't go above 21. So if it goes above 21, we're going to have to recommend to buy back that position. There are some stocks that did pay off. For instance, Mankind, since March 26 though, look, that stock lost more than 10% in 2 days, so definitely was a great profit-taking opportunity. It reached its April support, now a sudden rebound. So with a 78%, 36% increase, definitely if you already take some profit, it's good. But right now, it's you have to get out because the stock totally broke its resistance. There's also another stock, Method Electronics, though. That stock didn't have a lot of potential, though, about 5 or 6% until 27.42, since it was recommended as a short on March 26. Now it's having a rebound, but it's still a hold. As long as the stock doesn't go above 32.51, there's no panic on a stock like Method Electronics. Now, let's get down to business. Let's get down to the gold sector. What is it going on there? First of all, you see that gold is actually reaching its 50% Fibonacci retracement. So this is the point where gold actually starting to confirm a rebound, starting to confirm a stabilization phase. It's not yet in a bullish cycle. To confirm a bullish cycle, we'll need at least the gold sector to at least go above the 38.2% and at least to have some potential to reach the 23.6% Fibonacci retracement around 128.71. For the gold sector, though, we have GDX that I've shown you. GDX, what I'd like to see, it's a confirmation of a bullish cycle. For GDX to go above 24.50, then we could have actually a clear bullish cycle. So either you could actually trade the movement in the gold sector through ETF, such as GDX or HGU or NUGT, or you could actually start to trade it with some stocks that are standing out. Dator Gold, for instance, it's a stock that is definitely breaking out. So Dator Gold 913, this is where you should put your stop loss, but it's already taking 10%, so there's a big loss potential there in Dator Gold, but you also have the opportunity to make 10% to or more than 10% if it reaches 12.27. So this is actually something that you have as a potential. Barry Gold also is breaking out, clearly reversing its downward trend. So where should your stop loss be? Around 17.57 on the break of that support. So Barry Gold, Dator Gold are among the fewest breakouts. Those are the stocks that you could trade to benefit from a potential upward movement if it happens in the gold sector. And the stocks that you should put on your watch list include Semafo, higher than 413, Franco Nevada, higher than 52.21. So as I said, the bullish movement is not yet confirmed on the gold sector. We seems to have it. Some stocks are breaking out. Dator Gold, Barry Gold, yes, but make sure you put your stop loss on them. But to confirm a bullish momentum on the gold sector, we need to have GDX, this is an ETF I use, higher than 24.57 to actually confirm a bullish momentum. And I think that by acquiring some positions in ETFs such as GDX, HGU, or NUGT ahead of the bullish cycle of the gold sector, if it happens, I think it's still a good strategy before you actually trade those stocks. So it all depends on the type of investors you are. You could either go through stocks or go through ETF. Those are two strategies that you could favor. And in terms of the short potential that I've shown you last week, typical software, that's a stock that you have to watch. If markets make a new high and break their resistance, you're going to have to buy back your position. So that's it, folks. This was Christian Charlo from MarketGurus.tv. See you next week for your market report.